Now we're going to pivot to Europe for a moment. And, we don't have too much on Europe this time just because, we've covered a lot of Europe data and there was a huge slug of obviously US and other things. So, we're going to hit some of the high level notes in terms of Europe in general. And here you can see the retail sales in Spain. And I'm using Spain as an example just because we're seeing tourism down anywhere from 70 to 90% in different locations. Again, retail sales is a bigger side of that. When we look at the survey was expected to be down 5.3%, 3%, actual is down 5.8%. And again, it's that acceleration to the downside as we see more and more pressure in the market in general, specifically, or not just specifically, but also in Spain, in other areas that there's just, the U.S. isn't alone in terms of the slowdowns. In Spain, Italy, Germany, Germany has been able to maintain some of the growth more so than I think expectations, at least my expectations as well. But we're starting to see kind of all that catch up, especially as Germany exports to these other nations, exports to China. And we're just seeing this demand slowdown, which is, again, impacting things on the retail sales side. Again, coming back to the consumer, and how are we going to see more things move through the system or really not move through the system? So when we look at Eurozone PMIs, this is the bigger problem because we had surprises to the downside where, everything, obviously manufacturing continued to drift up, but services with the bounce was much less than expected. And now with extended, lockdowns in Germany, UK, additional pressures in Austria with additional extension of lockdowns there. Again, these are things that are going to continue to limit services. It's going to limit manufacturing. We're going to see these slowdowns that are just going to continue to hinder, which it will just pull manufacturing back down because you can see manufacturing kind of leads it up. And then as services start to fall, you start to see manufacturing start to fall. So again, this is why we remain concerned about the manufacturing, that while it's still strong, it's going to come under significant pressure as there's less services demanded, retail sales miss, consumers buying less. This is going to reduce the manufacturing overall. And it's really being driven by a lot of things, but virus spread is an important one, which is why we want to look at Covid-19 cases per 100,000 people. And this is where, again, we talked about in the EIA show, showing where things are. We talked about it in the first part, talking about where there's pressure. This is where we continue to see an overarching problem with just, how many people are infected and why we continue to see slowdowns and extensions of lockdowns to try to mitigate some of this expansion. And, as we talked about in the EIA part 2, it's gone down, but it's flatlined. It's not getting to target, which is why when we look at Germany's COVID-19 has slowed for sure. It rolled over, but it came off the highs and now it's sticky at where it was in November and the beginning of December. It's not getting to the target rate, which is where it needs to be to not see exponential growth. And this is why they extended to January to the end of January. But we've had lockdowns. The lockdown has been in place, and yet we're not getting to the level that they need to be. And that's where we start to see these concerns is, okay, well, what does it do to oil demand? What does it do to economic growth? What does it do to the consumer? What does it do to jobs? Because they're not achieving their goal even with the lockdowns. And that's why when we look at hard lockdown starts, it spikes, then it comes down, and now we need to see the continuation, which is why the hard lockdown is extended into the end of January to try to get closer to the target number. But if it's not achieved, do they go back down to a partial shutdown? Do they adjust to be a bit more lenient to allow some things to normalize, or do we get vaccines catching up the way that they feel better about it? Again, these are all those issues that are continuing to arise as we look at economic growth and the developed markets versus emerging markets, because Germany is an exporting nation. So if they're struggling, if they can't export as much, well, they're not going to import as much in terms of raw materials, which come typically from emerging markets, which again comes to the slowdown when we look at the global economy and how it's so interlinked. But when we look at long-term effects, what are going to be the long-term effects? This, again, is highlighting more remote home office working, acceleration of digitalization, reduced demand. And the reason why I stop at those three is because people are going to work from home more, which means that there's going to be less need for corporate space, less need for, in terms of driving, because people will be in their house more digitalization, which means that people will be replaced with machines, programs, others, again, pressure on demand, on unemployment, and then reduced demand. People will have less money to buy things. And this is going to be a much bigger problem. Less bus travel, virtual meetings, increased resilience, flexibility. All of these things all relate to the same thing, where more work from home, more digitalization, less money, so less demand for stuff. That is the problem with where we sit on economic growth in a nutshell. And it's not just in the US. Here it is, plain and simple in terms of the survey, in Europe as well. And that's where we see that overarching problem to what does the recovery look like? And then how to respond to the long-term effects of the pandemic. Productivity will increase. Why? More digitalization. Employment will be hurt. Why? Because of more productivity from digitalization, which means that wages will go down, which means that people will have less money to buy, so sales will be fairly flat. This is why why we focus so insanely on jobs, wage growth, inflation, because again, we're seeing it right here in terms of, and again, this is going to be how people feel. If you feel as though you're going to be impeded, you're going to spend less because you're going to want to conserve your savings just in case you don't get that job or you don't get that raise or that bonus. These are and then prices go up, and again, these are the problems that we continue to see in the market. And this is Europe, not the US, as we already kind of beat that one to death on the previous section, talking about the consumer. And then when we look at, typically German yield is follows this euro US dollar, and it's just not following that. So does one meet the other? And this is where we have to look at, does the dollar start to strengthen as we now have the, Georgia, they had their sweep. Now they took control of the Senate because it's 50-50 and the vice president is the tiebreaker. So now you have something that can adjust. All of that is baked in. Do you start to see people taking profits on their dollar shorts, and you start to see an adjustment in US dollar euro? And this is going to be something to watch or the German yield is going up, which is highly unlikely given how it hasn't barely done anything, which is why I think the euro dollar comes down to meet it. Again, they don't have to be perfect, but I think you'll start to see some of this arbitrage closed. And then as we go into German online retail sales, so you have to appreciate Germany's VAT or sales tax was cut, and that be rolling off this year. So you got a surge. We're going to get a surge into year end as Amazon in searches in Germany exploded higher because people are like, well, I'm going to lock down these sales prior to the VAT tax coming back. So expect to see a big surge in German sales ahead of the VAT tax coming back in 2021. Again, which is going to be a little bit of an uplift, but it's still going to be kind of that shot in the arm, and then will fade as we head into 2021 and the problems as we have more lockdowns in Europe, more lockdowns in other regions, and just a slowdown that is going to continue to weigh on just those data points, specifically PMI, and as we keep talking about retail sales and just what people are doing in Europe as they try to limit exposure, waiting for the rollout of the vaccine. As we talked about in the beginning of, in part one, Europe has been very slow in their rollout of the vaccine, which is going to have implications on how quickly people feel comfortable going back and getting back to normal.